Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. Checking out the Australian market mainly, the All Ordinaries down under Australia, that's the market that I personally trade, that's the market we'll be looking at today, and really interesting stuff because there's a whole lot of opinions out there at the moment which are extremely interesting. I absolutely love what people think about the markets. It's always very interesting to take it in, but what we've got prominent market commentator Alan Kohler. Absolutely love his stuff. See him on ABC. He's fantastic as far as I'm concerned. Also, technical analyst Alan Hull, written many books on technical analysis and trading in the share market. Both two excellent Australian market commentators, and both of them are calling for this recent downfall. They're both saying that it's just a mere correction, or even just a small correction, just a tiny correction. So, and in other words, they're actually expecting it to sort of rise directly from here, pretty much. Now, look, I think that is fantastic, and I hope that happens just between you and me. What I would like to compare that to is the other type of analysis that we have been looking at, and that is market cycles. And so this is basically where we're sitting at the moment. I would much rather if they were correct, but if they're not, then what we're looking at is the market cycle scenario. Now, the timing cycles, we were looking at these over the last couple of weeks, approximately 15 months. It runs really with a really high regularity between the lows, so low to low, around about 15 months. Of course, with a leeway period there as well, and potentially what we're heading down to now at the moment, because we've had our up phase, we're heading down into the low phase, and the low phase, the 100% level, or the next potential low, is in that actual 100% level is in September this year, so we could be seeing a low around that level. And we did look at how far that might go over the last couple of weeks as well. But apart from that, the orb period, like the soonest it might be, would be in July this year. So potentially, according to this time cycle theory, we might be seeing the next low in July 2012, or between then and December 2012, because obviously, nothing in the market is exact, and you just have to be aware that market sentiment does get in the way, and emotions do get in the way as well. In the meantime, the market is trending down, and that's exactly where we're sitting at the moment. It would really have to trade back above this level, the 4,300, for me to be bullish again at this stage. So in the meantime, that's where we sit. Looking at the individual sectors in the Australian market, this is very important as well, guys. Just really quickly, if we look at, there are a few that are really going great guns. So if you do want to be trading long in the market at the moment, there are still places to be putting your money. What we've got is healthcare. As you can see, the red line, this is healthcare. Absolutely killing it. So healthcare is doing fantastically. I'll show you some individual stocks in there at the moment. One of the other ones is utilities. As you can see, look at that. That is just beautiful stuff. The red line, well outperforming the All Ordinaries, which is the blue line. And telecommunications still going strong as well. Looking at it on the downside, I'm also taking trades on the downside myself personally. What I am looking at is materials. Look at that. The red line there, that's the materials sector. Absolutely getting pounded. So obviously Australia's darling sector, or the darling industry, the resources sector, not really doing so well, guys. Yeah. Definitely wouldn't be long in that sector myself, unless I wasn't an investor. So anyway, apart from that, there is one other one as well, materials. I think gold is doing very poorly. Look at that. That is, I mean, it's a beautiful chart, but I wouldn't go anywhere near it as far as buying gold is concerned at this stage. Yeah, well, anyway, that's enough on that. The energy sector as well, as you can see, beautiful chart. It's well below the All Ordinaries, about 10% below the All Ordinaries. And just between you and me as well, the All Ordinaries on a year-by-year basis, currently down 16%. So if you're above 0%, or if you've got your money in cash over the last year, or if you've been taking in dividends and you've had a few gains in your stocks, then you're actually well outperforming the market. Down 16%. So yeah, it has been a rough year, but obviously if you know how to trade, then you can potentially keep yourself safer in the markets. One last thing, we'll check out a few stocks in these sectors really quickly. So SGM, this has been just a beautiful trade. It's been my darling trade at the moment. Entered the short trade round about the $12.50 to $13 mark, down at around $10.50 at the moment. Happy days. On the long side, if you were to get into this as well, what's it called? AGL Energy, AGK. This one is in utilities, obviously. So utilities, as I was saying, is outperforming the market. In telecommunications, Telstra is still outperforming. Beautiful chart, that one, obviously. And I'm pretty sure you'll be pulling dividends at the same time. So that's a really beautiful looking chart. TEL, obviously, as well. Look at that beautiful trend. Happy days. MTU, I was in that one for a while, but I got stopped out personally, and now it's taking off, unfortunately for me. But apart from that, that is Australia from a chartist point of view. We're looking at Australia. Happy days, the beautiful sectors that are outperforming and underperforming. Follow the trend. Until next week, happy trending, and I will see you then. Bye for now.